Sometimes there's a lot to say about the markets and what the cycles are doing to influence them, and sometimes the markets behave very well and do exactly as has been expected of them, which is the case today. And so we're going to take a quick look at our regular markets, and because there won't be very much to say, we're also going to take a look at the Hang Seng. Here is the S&P 500 using SPX data, and of course we've been tracking this analysis for some time, so you should be very familiar with it. Here is our 18-month cycle trough in early April. We identified an 80-day cycle trough over here. I think that's the position in the third week of June. We have recently seen the formation of a 40-day cycle trough. That is this little low point over here, and of course we are expecting a 20-week cycle trough to occur next. Nothing has changed since the previous market update, which was recorded on this day over here. We are displaying our 20-week cycle FLD because at the time that the 20-week cycle trough forms, which is in about the middle of August, we would expect the 20-week cycle FLD to provide support, and so it is an important FLD for us to be watching at the moment. Displaying the composite model line as I did in the previous market update video, you can see we had our one 40-day cycle peak over here, and here is the second 40-day cycle peak. It is a slightly higher peak than the previous one in the composite model line, and that is because of the obvious bullish underlying trend. Nevertheless, we are expecting a peak to occur soon, after which the markets are expected to turn down and come to this 20-week cycle trough in about the middle of August. And although I say that this peak is expected soon, we have to assume that this market is moving up until we have confirmation that it has formed a peak and is turning down. We will do that. Let's quickly zoom in by monitoring the shorter cycle FLDs. And so let's display some here. We've got a 10-day, a 5-day, a 20-day. And so that is certainly good enough for now. As price starts crossing down these shorter cycle FLDs, which it inevitably must at some point, we can confirm that the peaks of these cycles, the 5-day, the 10-day, and then the 20-day cycle have formed in price. As price crosses down through these FLDs, we will be able to generate downside targets. Let's quickly add the 40-day cycle to the mix as well, and the 80-day and that 20-week cycle FLD. Bear in mind that price is expected to find support at the level of the 20-week cycle FLD at the time that this 20-week cycle trough forms. Is it possible that the price trough could form above the 20-week cycle FLD? It certainly is. This market has been very bullish. And so as price crosses down through the shorter cycle FLDs, we will generate our targets. There might come a time at which a target generated by price crossing an FLD does not carry it down below the next FLD. At that point, we will run out of targets, as it were, and there is the possibility that this trough might form higher than the 20-week cycle FLD. Taking a quick look at the Nasdaq, you will notice that this trough in April is now phased as an 18-month cycle trough. In previous market update videos, we were considering it as a trough of only 40-week magnitude. However, the persistent bullishness of this cycle encourages us to assume that the 18-month cycle trough has formed here, which makes more sense because it is an 18-month cycle trough in the S&P 500 and in other US markets. Again, we have our 80-day cycle trough over here in about the middle of June. That's a bit of a skew line, but there you can see the stack of diamonds marking the position of that 80-day cycle trough. Here is our composite model line, and again, we are forming our second 40-day cycle peak sometime soon. The composite model line tells us to expect the market to turn down and fall into this 20-week cycle trough, also expected in about the middle of August, and at that time we should find the price finds support at the level of the 20-week cycle FLD. I said pretty much all of this in the previous market update video, and so again nothing has really changed. Throwing all the FLDs up onto the chart, these are the shorter cycle FLDs that we will be watching closely to find confirmation that a peak has formed in this market market, after which point it is expected to turn down and reach the 20-week cycle trough. And here we have the Australian market, the ASX. Again, it is exactly the same situation. We have a big magnitude cycle trough that formed in April. I've discussed this before, but I assume that that is a 40-month cycle trough. I use a different nominal model to analyze the Australian markets. Nevertheless, it is a big magnitude cycle trough that formed in April. We have our 80-day cycle trough over here occurring about a week or 10 days later than it potentially did in the other markets we've just been looking at. And again, we have next our 20-week cycle trough expected in about the middle or third week of August. Displaying our composite model line, which takes all of the information contained in the cycle analysis, recomposes it, and shows us what would have happened in the past if the only thing influencing this market was the cycles that are shown at the foot of the chart. It then extends that into the future, assuming that the cycles are going to keep beating with the same wavelengths and amplitudes. Again, we are expecting a peak to form fairly soon, and then for the market to turn down and come into this 20-week cycle trough in August. And again, the 20-week cycle FLD is expected to provide support. The Australian market is slightly ahead of its American fellows, and that is because it has started crossing down through these shorter cycle FLDs. As you can see, the median price crossed below the 5-day cycle FLD at about this level over here, generating a target which should have carried it beneath both the 10-day cycle FLD and the 20-day cycle FLD, which, as of the time at which I am recording this video, which is before the US markets open on Monday the 28th of July, but a good deal of the Australian day's trading is over, and so price has now crossed down below the 20-day cycle FLD. It crossed it over the weekend, which is not very unusual. Price often crosses the FLD in the middle of a weekend, and so generating a target, we would expect price to cross just down below the 40-day FLD. And so we are already seeing some evidence that the peak has formed in the Australian markets. The US markets are expected to follow suit soon. Again, we are watching the 20-week cycle FLD for signs that price is finding support at the level of that 20-week cycle FLD at about the time that the 20-week cycle trough forms in the middle or third week of August. Here is the DAX, which we've been looking at recently. It makes for an interesting comparison with both the Australian and the US markets. I should point out these bar counts that I have been displaying on the charts. You can see there have been 39 days since the 80-day cycle trough formed in about the middle of June. The average length of the 80-day cycle is 68 days. And so we have about 29 days to go, according to the recent position of the 80-day cycle trough. This bar count tells us that there have been 112 days since the April trough, which of course is also in the DAX of 18-month magnitude. The average length of the 20-week cycle is 136 bars, and so we have another 24 days to go until that 20-week cycle trough could be expected to form if this turns out to be a wave of exactly average length. And so we are looking at the 20-week cycle trough forming in 3 to 4 weeks' time. There is the nest of lows at the foot of our chart, and again we are expecting the 20-week cycle FLD to provide support at the time that the 20-week cycle trough forms. If we take a look at our composite model line, you can see it is telling us that it seems likely that the peak of this 20-week cycle trough has already formed in the DAX, and price is now moving down towards this 20-week cycle trough expected over here in about the third week of August. The other stock market that we have been tracking fairly regularly recently is the Nifty from India, and again we have a very high magnitude cycle trough in early April. That was 112 days ago, and so if this is going to turn out to be a perfectly average cycle, we would expect another 24 days to elapse before the 20-week cycle trough forms. Here is the nest of lows for that 20-week cycle trough. we had a slightly earlier formation of the 80-day cycle trough over here in the second week of June. You can see that 45 days have elapsed since that trough formed, and therefore we have 23 days to go according to the average length of the 80-day cycle, which is of course 68 days. If you don't understand why the average length of an 80-day cycle is 68 days, I would encourage you to download the 10 Core Concepts document that I will provide a link to in the description below this video. And so the Nifty is also turning down into the 20-week cycle trough. The composite model line for the Nifty looks a little different to the composite model line that we observed in the other markets. Why is that? It is because the 40-day cycle has in fact had a greater amplitude as measured in this cycle analysis in the Nifty than it has had in the other markets that we've looked at. The 40-day cycle has been pretty much squeezed out by the other cycles in the American and the Australian and the European markets. However, in the Nifty, the 40-day cycle has retained much more of its amplitude, and that is why we are seeing this increased movement in the composite model line, simply because the amplitude of the 40-day cycle in the past has been stronger in this instrument. Bear in mind that amplitudes and wavelengths are constantly varying. That is the principle of variation, and so we cannot say with absolute certainty that this 40-day cycle is going to remain strong compared to the other cycles, but certainly it explains what has been happening in the past in the Nifty, and until we have evidence that the 40-day cycle has lost its strength, we can continue to expect it to show some strength, and so we might experience a bounce out of this impending 40-day cycle trough, which you can see according to this nest of lows is slightly overdue. There is something that Indian traders need to be a little careful about, and that is that if we do get a strong bounce occurring fairly soon out of what we are expecting to be a 40-day cycle trough over here, we need to stay alert to the possibility that it is in fact an early formation of the 20-week cycle trough. Notice the whiskers for the 20-week cycle, circle and whiskers. The circle represents the exact time that we would expect the next trough to occur, and these lines or whiskers to each side of the circle represent the range of time in which we could reasonably expect this 20-week cycle trough to occur. And as you can see, this left-hand whisker reaches back into last week. And so if a trough forms now and we get a bounce, although we are expecting it to be a trough of the 40-day cycle, we need to bear in mind the possibility that we could be seeing an early 20-week cycle trough forming in the Nifty. Now, I thought it would be interesting to take a look at the Hang Seng. I was asked in a comment on a recent market update video why I never looked at it. The reason is simply because YouTube tells us where most of our viewers come from, and so we have been choosing instruments on the basis of where those viewers come from. However, you might have noticed that YouTube are now automatically dubbing or translating my videos into various different languages, and we have seen an increase in viewers from around the world, which is very encouraging. So we're going to take a very quick look at the Hang Seng, starting with a monthly chart. Here we are going all the way back to 1997, I believe, and this is the bigger picture. We could discuss and debate this analysis, as we always could when looking at the bigger picture. The important thing to point out here is that we have some very obvious troughs here. Here, I'm drawing these yellow circles around the fairly important troughs here, and then here, with perhaps a question mark over this trough. Now, when you start performing an analysis, the first thing that you do is that you identify the most prominent, the most visually obvious troughs, and you measure the distance between them. It's a really important process to go through, and I recorded a series of videos in which I discussed the manual process of performing an analysis. I would encourage you to take a look at that. I will also put the link to that playlist in the description below this video. Sentient Trader has has performed that for us. And one of the problems, if you like, with working with software is that it does this for you, which deprives us to some extent of the deeper understanding that we can develop by performing the analysis manually. I'm not going to dwell on it here, but I would encourage you, if you're analyzing any market, to start with the bigger picture and to identify these cycle troughs and then to measure the distance between them. What you do is you add those up and you average them and you ask yourself whether this market fits into the nominal model that we're working with. The good news is that it does. The position of the longer 9-year cycle trough could be debated. We could instead position the 9-year cycle trough beneath this trough here and this trough here, which would mean that this would only be a 54-month cycle trough. But I prefer this analysis considering that we have the start of a new 9-year cycle that occurred over here in 2022. And so for my purposes, identifying this trough at the end of 2022 as an important cycle trough, whether it is 9-year or 54-month cycle magnitude, doesn't particularly matter. It is, in my opinion, a very big cycle trough. Zooming in and looking at the market on a weekly time frame, you can see that we had this straight up and then downward movement, which was probably an 18-month cycle, coming in short at 14.8 months. This is a market that is strongly influenced by news events and things that are happening around the world, particularly in the relationship between the Hong Kong market and other world markets. And so we see quite a lot of fundamental interaction. The important thing for me at the moment is that I am happy to place an 18-month cycle trough over here in early 2024. This means that in early 2025, at the beginning of this year, we have a trough of 40-week magnitude. That presents an interesting comparison to the other markets that we've been looking at, where the more prominent trough, of course, occurred 3 or 4 months later. There are no doubt reasons for that, to do with the relationships between the countries and their respective economies. But to focus for now purely on the cycle analysis, let's zoom in and take a look at what has happened since the formation of that 40-week cycle trough in the beginning of 2025. And here we can see very clearly what I mean about this market being strongly influenced by fundamental events. This big gap down was, of course, the announcements of the US trade tariffs in early April. Now, according to this analysis, with the 40-week cycle trough having formed at the beginning of 2025, this trough that was so prominent in the other markets we have been looking at was only going to be a trough of 80-day magnitude. If we display our composite model line to get an understanding of what the influence of these cycles has been, you will notice the anomaly that was caused by that news event. Here is the influence of these cycles if the only thing influencing this market had been the cycles. But of course there are other things influencing financial markets, in particular news announcements such as the trade tariffs being imposed by the US as announced on this date over here. When a news announcement causes a sudden shock to the markets, what we will find happening is that the cycle structure generally remains in place, but things get distorted by the impact of that news event. And that is very clear here with the sudden gap down. An 80-day cycle trough did indeed form and has been identified in the analysis. But it took this market about 2 months to get back to a state of normality, as it were, after that sudden shock to the markets. And according to this analysis, we have a 20-week cycle trough over here in about the middle of June. At this point, the commonality between the markets is coming back into place. Because, of course, the trough in the middle of June was an 80-day cycle trough in the other markets that we've been looking at. Clearly, the Chinese markets are beating with a slightly different rhythm, and the 20-week cycle, instead of forming a trough over here in April, has been displaced by one 80-day cycle. The important thing is what we are expecting next. Here is the 20-week cycle trough in the 3rd week of June. Here is our sequence of interactions, our A category interaction, our B category interaction as price came down to the 20-day cycle trough. Here is our C category interaction. The 40-day cycle trough was very subtle in this market, indicating that it is being overpowered probably by the 80-day and 20-week cycles. Of course, next we would expect price to cross down below this 20-day FLD on its way into the 80-day cycle trough that is expected in about the middle or 3rd week of August. So it will be interesting to revisit the Hang Seng again sometime in the near future to see how things play out. Gold is another instrument for which there is not really very much to add over what I said in the previous market update video. In recent videos, we have been discussing the fact that we are expecting a very high magnitude cycle peak to form in gold. This is not only a 9-year cycle peak, but in fact an 18-year cycle peak. Now, of course, when marking the position of such a long cycle peak or trough, we need to see confirmation that that peak or trough has formed, and we have certainly not had that confirmation yet. As you can see, since this potential peak formed in about the middle of April, gold has pretty much just been moving in a contracting wedge or triangular formation. And so we have certainly not had confirmation that that peak has formed. Why then, as a matter of interest, does the software position those triangles over there? The reason it does it is because if it doesn't position triangles marking a potential peak, then everything after that time would just be one big massive nest of highs, just a huge mess of we're expecting a peak but we haven't found it yet. And so what the software does, what any sensible analyst does, is they mark that peak but they don't take it too seriously. I speak about my level of confidence in an analysis, and my level of confidence in the peak analysis is certainly not at the 18-year level. My level of confidence at the moment is at either the 20-week or possibly the 40-week level. In other words, I think this was a peak of at least 20-week magnitude, possibly 40-week magnitude. Over here, we had an early 80-day cycle peak, and this move up over here looks as if though it was a 40-day cycle peak. In terms of peaks, we're expecting our next 20-week cycle peak over here. This is the nest of highs for that 20-week cycle peak, but notice the displaced circle and whiskers for the 20-week cycle. That is a bit of a red warning flag when we see the nest of highs or the nest of lows not lining up very well. It indicates that there might be something wrong in our analysis, and so I choose not to consider that the 18-year cycle peak has in fact formed, but I am certainly aware of the fact that this 18-year cycle peak should be forming at some time. Of course, with the principle of variation in mind, we need to give all the cycles some room to breathe, and when considering the peak of an 18-year cycle, we should really allow leeway of a good year or two. I point this out because of the fact that we're expecting such a big peak, and also because in gold the peaks are normally sharp and isolated. In other words, we get a strong peak forming and then price moves away quickly, and then you might get another lower peak and so forth. But generally speaking, the peaks in gold are sharp and isolated, and this has not been a sharp and isolated peak, as you can see if only looking at the closing and opening values of these bars. We've had 3 and now 4 peaks at very much the same level. That's certainly not an isolated peak, and nor is it a sharp one. And so again, I think it is perfectly possible that gold is going to reach up to higher price levels, despite the fact that the software is positioning this very big cycle peak over here. That big cycle peak, in my opinion, still lies ahead of us. The trough analysis has recently been good and clear. We have a 40-week cycle trough over here, and we are next expecting an 80-day cycle trough in early August. If we zoom in and hide our peak analysis, you can see a good, very clean sequence of interactions between price and the 20-day FLD labeled on our chart. The BC category interaction particularly was rather good. You can see the price found support at the level of the 20-day FLD at that time. Price crossed down below the FLD and fairly accurately achieved its target to form the 40-day cycle trough over here at the end of June. And price is now just crossing down below the 20-day FLD, as you can see. That will generate a target to the downside round about over here at about 32.50 or perhaps a little above, and here is the nest of lows for that 80-day cycle trough. And so gold is the one instrument that is expecting something a little bit different from everything else. We are looking at price coming down and achieving its 20-day cycle FLD cross target, forming the 80-day cycle trough and then bouncing up again. Finally, Bitcoin, as mentioned in recent market updates, has been beating with a very similar rhythm to the other markets that we've been tracking. In Bitcoin, however, we have our greater magnitude cycle trough phased in August of last year, and the trough that formed in April was of 40-week magnitude. This is a weekly chart that we're looking at because I wanted to point out the effective way in which this 40-week cycle FLD, this green line over here, provided support to price as the 40-week cycle trough formed. That is, of course, what we expected it to do on the basis of the sequence of interactions that we trade between price and the FLD. Bitcoin is also expected to form a 20-week cycle trough later in August, as mentioned in the previous market update video, and you can see our composite model line is indicating that a peak should be forming at around about this time. It could possibly have formed a couple of weeks ago, and price is expected to move down, not very much, but it is expected to move down into this trough of the 20-week cycle. And then we need to be standing by for this 18-month cycle trough towards the end of this year or even early next year. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Hurst Cycles Discord server. I look forward to hearing from you.